Hi, all. This is Dr. J at 11, streaming live from Long Island, New York, where the weather is cold, getting colder, getting very cold, 9 degrees worth by the morning. Ooh. I'm going to get double blankets for tonight. Turn the thermostat up as high as it'll go and contemplate staying in tomorrow. But for tonight, I am going to hopefully enlighten you as to the fundamentals of stock charting. We had lessons 1 and 2. Dr. J talked about bullish and bearish candlesticks. I talked about engulfing patterns, haramis, one candle reversals. And I didn't really give tremendous examples. So I will give examples in the form of a review of lessons 1 and 2 tonight. And the new material will be how to draw a trend line, how to use trend lines. A couple of examples. So, as always, with your own due diligence, my opinions are strictly my own, do not constitute investment advice. Occasionally, Dr. J has some good ideas, and you can follow at your own risk. Please subscribe. Please give me a thumbs up. Tell others about this course. Tell others about me. Tell others about my new eyeglass frames. Yes, I am the same instructor as lessons 1 and 2. I'm wearing a disguise. This is my Clark Kent disguise. Do I look like Clark Kent? Probably not. In any event, we will start in about 30 seconds, hopefully. I will be going to some share screen mode and look at some video charts and hopefully enlighten you further. So without further ado, let's do that. Please write comments, give me feedback. Subscribe, tell your friends, all of those things. So let's hope I can share screen successfully. I think I have. Okay. Okay, so I have a bunch of examples. I think the last 2 are the new material, Amazon and Apple. So let's just maybe review by looking at what I did in lesson 1, homework 1. What was homework 1? We talked about what is a bullish candle, what is a bearish candle, the parts of a candle, the opening, the close, the high, and the low on an up day, the open, the close, the low, and the high on a down day. The tails of the shadows are also known as tail and wick of the candlestick. So this is how all candlesticks are comprised really of 4 parts: the upper wick or the upper shadow, the body, and the lower shadow or the tail. Sometimes there is no tail at all, and sometimes there is no wick at all. So you might have a candle that opens and closes at the high and low of the day. I mean, that is possible. By the way, if you want to reach me to submit homework or ask questions, redivit@gmail.com. I did give some homework. I said, please draw a circle around the bearish engulfing. Those of you who missed that, this would be the answer. And then I said to mathematize the engulfing by writing inequalities that need to be satisfied for each of the engulfings, bullish and bearish. So we'll elaborate some more in the review by looking at pictures of actual engulfings, looking at charts. All right, so let's get to the charts. I have no idea in what order I did things, but I do know that I don't know anything. Let's look at, I know that I know nothing. Let's look at what is a harami pattern. A harami pattern is it's called harami because it resembles a pregnant lady. This is the baby. This particular case, a pregnant lady is carrying rather low. It comes at the end of a downtrend. The longer the downtrend, the better. It's also called an inside day because the entire candle is inside the candle of the day before, including the wick and the tail, and the body is engulfed by the body of the day before. I like the color to change. That is, it's a reversal indicator. So I would prefer if there was a downtrend that the reversal candle be green. I also prefer that the body be in the upper portion of the body of the day before. I think you get better results. In this case, it's in the lower portion, which is still good for the definition of harami. Okay, notice it was a successful indicator according to this chart, whether it's apparently a real chart from Reliance Industries. Let's look at some other real charts. This is the S&P 500. That's new material. This is the RUT. The Russell 2000, better known as the Russell 2000. So what have we got here? We have bullish harami. We have an engulfing. The green candle is engulfed by the red one. So it's an inside day or a harami, same thing. Pretty much the same thing, not exactly. The entire body of the green candle is within the body of the red one. Again, I like it to be further up. This is lower down. It doesn't matter in this case about the shadows because there basically aren't any shadows. Did this work? Well, sort of. You had a little bit of a down day the next 2 days, and then it did go up until it stopped going up, went down. Could you have made money playing this to the upside on a swing trade? I suppose so, but you would have had to be pretty nimble. I want you to know that haramis are ubiquitous and should only be considered important at the end of a long downtrend or the end of a long uptrend. So you'll find haramis very, very common. Let's look at the Tesla chart. Tesla chart here from going back to October, right? What have we got that's of interest? Well, we have an engulfing. I believe we have an engulfing. Yes, we have an engulfing. This is a bearish engulfing. We had a nice uptrend of about 15 days, approximately 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 days. We have a big red candle that engulfs the day before. The body engulfs the body. The entire candle is engulfed as well. So it's a bearish engulfing. And does this work? Could you have made money swing trading this? Well, if you got in at the open, you had an opportunity to get out with making a nice profit. The question is, would you have gotten out, or would you have waited to lose money? So the key is not only how do you go in on a engulfing, but when to get out. That's the key, and for that you have to have other criteria than just identifying the engulfing. Okay, we'll talk about that another time. When to exit a trade. That's an engulfing. Let's look at what else we have here. We have a harami. We have a harami, bullish harami right here, which actually marks the end of the downtrend. That would have been a nice exit criteria. If you get a harami, exit. In any event, had you gone in to the long side, you would have gone in here and had an opportunity to get out for very handsome profits. So this harami worked quite nicely right here for Tesla. So this is a nice example of two of our patterns. We have a bullish harami and a bearish engulfing up here. Okay, that's Tesla. I don't know what the electronic arts is, why I picked it. Oh, up here, I guess. Up here we have a harami and an engulfing. We have a bearish harami, and we have first we have a bullish harami. It's very small downtrend, followed by a bearish engulfing. Now, the bearish engulfing is the dominant pattern here. And sure enough, it would have produced very, very handsome returns had you been nimble enough to ride it all the way down to 74. You could have gotten in at the open here, which was 135, down to 74. That's a phenomenal short. It turned out to be a phenomenal short, this particular engulfing pattern. What was the date of this? 7/26. It must have been news that caused the initial drop, and it just continued to plunge. And I'm looking to see if there's any other one of our patterns. Well, here we have a bullish harami, and it is after a long downturn. But did this produce profits? Not really. You would have lost your shirt on this one. So haramis are really dubious. They occur all the time. Here we happen to have another bearish engulfing that confirmed this bearish engulfing for the original one. And it was on what was an attempted rebound. And it gave you another opportunity to short this thing, and would have again returned handsomely, as this engulfing on 10/1 proved to be very, very profitable. So electronic arts has a couple of bearish engulfings in this particular picture. What are we up to? Guess we're up to the Dow. One of Dr. J's favorite patterns is a single red candle or a single green candle at the end of a long uptrend or downtrend. Okay, here we have a single green candle at the end of a very, very long, steep downtrend that began right here on October the 3rd at the all-time high of the Dow Jones Industrial Average. And notice this is the biggest candle. Not only is it a large green candle, but it's the biggest large green candle ever experienced in the Dow. So this was a very good reversal signal. Had you gone in at the open, that would have been right here. You would have made quite a lot of points on the Dow, on the diamonds or options, however you played it. So this would have been a good opportunity to take advantage of what looked to me to be an obvious turnaround signal. One big green candle is very powerful after a long downtrend. Another example, Amazon.com. I don't remember what this is an example of. What is it an example of? A good question. Amazon.com. Why did I include this? How do I get this thing to slide up? I suppose maybe the same reason. No, this is not. Yeah, one big green candle on 1226 led to a big move up. That might be the reason I picked it. Oh no, this is the reason I picked it. It's actually called the high of Amazon. The high of Amazon was 2050 on 9/4. You have a big red candle. Let me blow it up a little bit. Notice we have a big red candle that is relative to the day before and relative to the size of most of the candles before it. So this is a not as big a candle as we had an example in the Dow, but it's a large green candle at the end of a huge uptrend. So had you gone in at the open here, you would have made a lot of money all the way down to 1400 or so. So from 20, what was the open? I can't see. It's hard to see because of this, but it would have been at least over 2,000 all the way down to 1,400, 600 points. I'll take it. So this actually called the all-time high. This single red candle. Okay, Apple. Okay, this. Now we're getting into the new material. We talked about single red candles, single green candles as reversal indicators. We talked about haramis as reversal indicators. We talked about engulfing patterns as reversal indicators. In fact, everything we talked about was reversal indicators. And now we're going to look at drawing a trend line. Okay, so let's take a look at the trend line that I drew. This is for Apple. I drew an upper trend, a descending trend line here that has 1, 2, 3, 4, 5, 6 touches along its upper trend line. The touches are all the high of the day, every one of those touches. I drew another trend line for the lows. So we have 1, 2, 3, 4, 5. If it goes over, I'm not counting it as a touch. So we have 5 touches of each, the uppers and the lowers. When you have 2 trend lines like this that are nearly in parallel, it's called a channel. So we have a clear channel down composed of these 2 trend lines. So the question remains, how do you draw a trend line? Before we draw it, let's erase it. Okay, so let's say you want to draw a trend line. Hit the draw, line comes up. Now you're looking at this and you see there's a clear downtrend. You could start up here maybe and see what you get. One thing about drawing, you can always take your pencil and paper and eraser and erase whatever you draw. So let's say we want to start at the very, very top, drawing a trend line. First of all, I don't like where I started, so I'm going to use my eraser right away. I wanted to start a little bit higher. Better. So if we look to connect the first few points, 3 touches, we get this trend line here. And this is not a very useful trend line, is it? So what I tend to do with a useless trend line is get rid of it. Okay, what would be much more useful is a trend line that has many more touches. What is the definition of a trend line? You got me. It kind of comes with experience where you should draw your trend lines. A trend line is a line with many touches. How many? At least 3 in most cases. If you want two is possible because 2 points determine a line, but then is it really a trend? Well, maybe if you have a lot of near misses, you might get away with 2. Also, I include the upper shadow. Some people like to draw the trend lines at the close and open. I don't believe, only at the top of the body, the bottom of the body. I don't believe in that because you're throwing away an important part of the candle. That is the shadows. I wouldn't throw it away. So this doesn't look like an ideal place to draw a trend line. From experience, I would probably look to draw one that comes down all the way here. Maybe I would start my trend line right about here and look to draw it this way. Okay, so I want to include this point. So I put it at the top of that point right there. And the top would be right about there. Okay, I actually drew it a little bit off kilter, but you get the idea. We have 1 touch, 2 touch, 3 touch, 4 touch, 5 touch, 6 touches, 7 touches, about 7 touches of that trend line. Push this up. Come on. Okay. Now, I also want to draw a smaller trend line that connects this little uptrend that we're experiencing in Apple. So I did that. I drew that. But the important thing is, even if I didn't draw this, the important thing is that if you look at this particular trend line, only once did it actually go above the trend line for 1 day, and then all the rest of the candles touch the trend line. And depending on how I draw this doggone thing, it might actually hit at that point. So it's very arbitrary. You might say that it's close enough to consider it not really free of the trend line. So you would say, well, this one is not free, but this one is. And then you have another candle that's even further away from the trend line and even further away from the trend line. At this point, you start thinking new trend line. So we've established a new trend line with a few touches here. 1, 2, 3, 4 touches or 3 touches. There's only a few candles to draw this through. The important thing is that we made a break of the descending trend line here. So that's why this is useful. Even without this, if I erase this, it's still clear that we've gotten away from this sharp descending trend line, and Apple might be at this point a good buy. Of course, compared to other stocks and indices, it hasn't made the move that some of the others that you've seen in some of the other FANG stocks and some of the other and the indices themselves. So it is a laggard, but it's heading in the right direction finally. Okay, so Amazon we looked at. The S&P 500 is. I drew 2 trend lines here. Notice I'm looking to connect the end point, the low of the day with the low of the day, 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 low of the day, low of the day. It must be about 8 hits on the lower ascending trend line. On the higher ascending trend line, I'm looking to connect the upper, the highs of the day, high 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 of the day. And eventually we run out of ground because they intersect. When you have an intersection point like this, you know, it's not going to go forever. It can't, because by the 25th of October, you run out of ground. Well, we ran out of ground by the 4th of October, as it clearly broke its lower trend line. So this actually called close to the top in the S&P 500. So October 4th was the beginning of a beautiful downtrend that you could have made a lot of money on just by drawing two lines. I don't think there's anything more powerful than a straight edge in charting. So when you look at two straight edges that come together in a point, you know that it's something's got to give, either to the upside or the downside. In this case, it gave to the downside after a tremendous long upward trend line. Look at this upward trend line. It didn't tell the story from over here. It goes much further. So this is a very long trend line that started really, right around here on the 27th of March. The lower trend line started probably June 28th. So these two trend lines come together in a point. You got to be very suspicious that it's going to break either to the top or to the bottom, one way or the other. I mean, it's been going up, 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 and it's coming together. So you might expect it's time for a pullback. So you might actually be looking for that pullback. You get the pullback, you immediately go short the following day on October 5th at the open, which is 29.02. And when to cover? Well, I can tell you down here, but how do you know that? That's another subject. So we're not going to look at how to cover just yet. But I am going to give you some homework. I guess I should write the homework. Homework lesson 3, right? I don't know what I did with homework from lesson 2. Homework, you'd have to watch lesson 2 to find the homework. Homework 3, identify useful trend lines in each of the FANG stocks. And draw them. What conclusions can you arrive at? Any current chart that you feel has a strong trend line? Now, the longer the trend line, the stronger the trend line. So I'm going to save this because I don't want to lose it. And I'm going to write this in as a comment. Homework 3 will be a comment. Control C. Okay, so I think that's enough of a lesson for today, don't you? So this has been Dr. J at 11, coming to you live, streaming live from Long Island, New York. Be sure to look at lessons 1 and 2. You might benefit from that, even though Dr. J takes certain liberties in lesson 2. With my definition of harami, I'm a little bit loose. I don't like haramis. Let me just point out that I seldom use haramis. I prefer the engulfing pattern to a harami because it's much less ubiquitous. Haramis are inside days, mostly noise, and seldom do they really mean something unless they're at the end of a very long downtrend or a very long uptrend. Then I pay attention. It has to be some other reason other than just being a harami. So this has been Dr. J reminding you to subscribe. There's going to be a little G at the top of the screen. Just put your cursor over that. I think that's a way of subscribing. Tell your friends, share the video, share the course, share me. I like to be shared, write comments. You can reach me also at readdivit.com. And have a great rest of the evening and rest of the week. Not sure when I'm coming to you next. That's why you should subscribe so you get notification. You can look at some of my other recent videos from this weekend. That's it for now. Sayonara, shalom, hasta la vista, adios amigos, ciao.